Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will take a look at Tesla as well as the broader market, including some of the technology stocks such as Amazon, Google, and Apple. And I'd like to walk you through the technical analysis, share with you my price targets for the next few days and the next few weeks, as well as what to be prepared for and if and when we should be entering leap call options for Tesla. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. I want to share with you the reason why I have not been able to make regular videos recently. Historically, I've been making 2 to 3 videos a week, and lately it has been just 1 video a week. After about 2 years of pandemic working from home, I am now back to the office 2 to 3 days a week, which makes making video at home a lot more difficult and time constrained. Having said that, I am still very much committed to grow the channel and to share with you guys as much as I can about my opinion of Tesla as well as the rest of the stock market. I want to foster a community of Tesla technical traders as well as shareholders that are interested in short-term priced action in order to take advantage of some of the leap call options here. And I know there are a lot of you guys out there. So for that reason, I will continue to make my video and continue to grow the channel to the extent that I can. Admittedly, with the work schedule having to come back to the office, it is not as easy to make video between lunchtime anymore. But that shouldn't deter my loyal fan base and audience base to continue to support my channel, and I really appreciate each and every one of you. So let's get back into chart analysis. So we'll start with the daily chart. Last Friday, the price action was pretty discouraging. Tesla touched 50 days SMA at $937, which is the high point of the day, and retraced. It ended the day at $870. So if you were to look at the last 4 days, this chart is pretty bearish. As of Thursday, it looks like it tried to reverse, although it ended right below 200 days SMA at 901. It gave us some hope. And on Friday, we would think that it would make it all the way above 937. And if it did, that would have been a very bullish candle. But it didn't. It ended the day well below 200 days SMA again, which tells me that the worst days are still ahead for Tesla. The volume for Friday was 114%, but predominantly sell volume, which was unfortunate for Tesla, but another opportunity to buy into Tesla if that is your choice. I did enter a call option with the intention to hold a lot longer, right around $830, but with the very strange price action on Friday, hitting 50 days SMA and then rejected 50 days SMA, I decided to sell my call option. I made a little bit of a profit, but I had intent to hold a lot longer than just a couple of days there. Let's take a look at the weekly chart, but before we go into the technical analysis, I wanted to take a step back and remind all of us shareholders that Tesla earnings per share has been going up over the last few quarters. This was back in October 2020, 76 cents per share, then 80 cents per share, 93 cents per share, $1.45, $1.86. As of October 2021, $2.54, January 2022, and $3.22. So that is enough to tell the story of a company that is growing and increasingly profitable. So I don't have to encourage the long-term shareholders out there to hold or to add shares. You know what to do when Tesla dipped down to below 900 like this. This is probably one of the last opportunities to buy. And I know I say that a lot. And of course, Tesla can continue to fall. But if you are looking at 2 to 3 to 5 years out or 10 years out, and Tesla at $3,000 to $4,000 per share, whether you bought the stock at $850, $870, $900, $1,000, $1,100, it would not matter. If it makes you guys feel any better, here is a screenshot that Jason DeBolt on Twitter shared his account a few days ago when Tesla went down about 12.5%. He was down about $1.8 million. And he has been investing in Tesla since 2013. He doesn't have any plan to sell Tesla anytime soon. You have seen a lot of these retail investors that have been holding Tesla for a long time. And you know that this is a tough road. Tesla is a highly volatile stock, and it can take your day pretty wildly from one point to another, as was the case on Friday. In my mind, of course, Tesla is not cash equivalent, but in the long run, it represents one of the best return out there in the stock market. Let's get back into chart analysis here. Here is the weekly chart. And as we know, Tesla has a dip back down below 200 days SMA at 901 and ended the week below that at $870. Short term, it is very bearish, especially after a failed rocket launch from the week before. As you can see, RSI here is not at oversold yet on the weekly level. Oversold would have been like these three areas here where Tesla reached pretty much around the $800 area. It was hitting oversold on the weekly chart. Here it has not. Now it has gotten a little bit closer to the oversold territory. So let's say if Monday and Tuesday Tesla keep going down a little further and reach about $800, I would expect the weekly RSI to hit oversold. The more oversold it looks, the more likely it is the stock will reverse. So if you look at March and May of last year, this is where Tesla hit extreme oversold level of about 1% here. Right now, Tesla is still at around 14% on the RSI level. So it is not oversold yet, and I expect it to get to oversold if it keeps going down further, potentially touch 100 or even slightly below that for it to hit oversold. That is another excellent opportunity to enter a leap call option. Let's take a look at the overall market conditions. So first, let's take a look at the Nasdaq. Actually, I want to take a look at the QQQ. On the daily chart. So QQQ lost both 50 days SMA and 200 days SMA. Death cross was created in early March. So it is very much in bearish territory at this point. Interestingly, as the stock price is going down, RSI has been moving up. There is the initial sign of divergence there, and it's just a matter of time before it reversing. When I say sign of divergence, it doesn't necessarily signal imminent divergence or reversal. It just means that there is evidence that the stock wants to move up. When exactly it will move up, nobody knows. So we're going to have to take 1 hour at a time and 1 day at a time. By just looking at the RSI, I'm expecting the Nasdaq to bounce, but that doesn't mean that I'm going to enter in any call option just yet. Let's go to the weekly chart for the QQQ. The weekly chart 4 weeks in a row has been moving down consistently for the Nasdaq. Now, if you look at the weekly chart, this does look oversold to me. And it is similar condition to about the week of March the 7th. It is also similar to the week of September 27th, where it touched oversold and immediately bounced up. This retracement, however, is definitely not just a higher low. It made a recent new low, and this low is just as low as way back in March of last year. So for the last 12 months, the Nasdaq seemed to not move anywhere. If you were to, so it literally erased any gain that it made the last 12 months. I think with the oversold condition in the RSI on the weekly here, we're probably going to look at a reversal next week or the week after. Let's take a look at S&P 500 via SPY. So on the weeklies for SPY here, it is touching oversold as well on the RSI. The weekly candle also 4 weeks in a row moving down. Right now, $412 is a very strong support, and I hope it will bounce here. So this is interesting for both the Nasdaq and the S&P 500. It tells me that on Monday, if it makes a bearish leg in the morning, that means that it most likely will reverse, because right now it's already extremely oversold. If Monday it has a gap down, it would fill that gap and go all the way up. Or if it opens sideways, it might potentially dip down a little bit, retest possibly 406, and then bounce strongly from there. So what this tells me is that Tesla just need another leg down. And whether that takes an hour, half an hour, a day, or 2 days, we don't know. But Tesla needs another leg down to hit oversold on the weekly chart before it is reversing. We'll go back to Tesla chart in a little bit. Let's take a look at Amazon. Amazon is an interesting situation. I have been a fan and an investor in Amazon. But looking at this chart here, it is incredibly bearish, and this is a weekly chart. I have my weekly bull flag that started back in mid-2020. And Amazon has been consolidating for a long time, did not fall out of 2,800 until this past week. And so with this weekly candle, where it fell out of the bottom end of my bull flag is effectively canceled, unfortunately, and the bearish case has begun to emerge. And Amazon has a lot of room to the downside with the immediate downside of 24.52. It seems to hit that area or so on Friday. It will probably fall back down to the 2300s and 2200s before getting back up here. Amazon, however, will have a 20-to-1 split on June 6th, so that is only about a month from here. From a fundamental standpoint, I think Amazon is a very good purchase still. It is one of the biggest business out there. It has very strong business model and fundamentals. I do believe that Amazon will bounce, but it all depends on how you view the outlook of the economy. A lot of people believe that we have a recession at the end of 2022 or early 2023. And when we have a recession, people will scale back from shopping, right? And that could translate into reduce in revenue and reduce in earnings for Amazon. In fact, Amazon forecasts the outlook for the next quarter is only 5% growth top line. So I don't think that Amazon is looking too bullish right now, both fundamentally and technically, but I still think that in the long run, and by long run, I mean 2 to 3 to 5 years out, even 10 years out, the business model is very strong, and Amazon will be able to weather through whatever bearish season or recession that is coming its way. So long story short, I will want to buy more of Amazon when it gets to about 2200 level, and so I will be patiently waiting for that. Let's also take a look at Google. So on the weekly chart, Google also looks pretty bearish. The technical is not as broken as Amazon, but it is definitely bearish with the last 4 weeks falling downhill. So the entire month of April, the market has not been kind to any investors out there. Google, though, has really strong fundamentals, and it did not have a loss for the quarter, unlike Amazon. It still made $24.62 per share, which is pretty good for Google still. So I do think Google has probably the best chance of all the other technology stocks to bounce and to hold previous level of about 2600 or so. But right now it is at 2282. It is also a good opportunity to buy. It is at a decent support now. The next support level would be about 2100, then 1986, and then we're looking at 1800. Of course, I'll be a buyer on the way down. Even though on the weekly chart, I think Google is very oversold now. It is set to bounce anytime and potentially even this coming week. So let's get back to Tesla. Again, this is still the weekly chart for Tesla. And as you can see, Tesla has not reached oversold on the weekly, unlike Google, S&P 500, and the QQQ. On the daily chart, Tesla is also not oversold. It was oversold a couple of days ago, but it was not oversold as of Friday. So once again, Tesla will need to go through some more pain before it gets to the oversold condition and then bounce. I wouldn't be surprised if Tesla get to around $800 level. From now until then, that's another $70 to go. I certainly hope that it won't get there, but the sooner it gets there, the faster it will bounce. The volume for the last 2 weeks has been really good, although the majority of the volume was sell volume. So in my mind, I will be waiting for one last leg of Tesla moving down, and I'm gauging that right between 843. I'll start looking at potential call options, but I think 820 might be a good play, or 796, 800 level. Let's take a look at leap call options. So I'm going to start with perhaps March of 2023. I know that's not the farthest one out, but let's start there because it seems like a long enough timeline, but it's not the most expensive in terms of premium. And by March 2023, I expect Tesla to get to about $2,000 minimum. So if I'm looking at anything within $1,100 to $1,200 in strike price, I think that's pretty good odd that Tesla will get there. $1,100 is right now at around $13,000, and $1,200 is now around 11,000. These are good odds to hold about almost 2 years out. And by then, if Tesla got to 2,000, each of these options should be easily 80,000 each, right? So if you really want to hold long term, I think that's a good idea. If you just want to play the short term momentum, I would still wait until Tesla get to the mid 800 or the low 800 before entering these sleep call options. And if you have the budget, I would do 2 call options like that. One that is around $1,100 for March, and another one perhaps $1,200 or $1,400 for June of 2024. So June 2024, that is 2 years out. And you are looking at very heavy premium, right? So $1,100 is about $25,000. If you look at $1,200, it is about $23,500 to $24,000. So these hold up pretty well when Tesla moves sideways because you still have 2 years in time. And so for that reason, I think that these represent a decently safe trading opportunity. Of course, trading is not safe, but comparing the odds of losing a lot of money, you still have a lot of time, roughly 2 years for Tesla to get to $1,200, and the value of that premium is about $24,000. So it's not too bad. For June 2024, I'd even venture to go out to $1,600. That is about $16,000. Now, right now we're at $870. It's really hard to envision $1,600, and so buying this would be really far out the money. Betting Tesla will double in the next 2 years. In my mind, as an investor, it is entirely possible and very likely as a matter of fact. But from a trading standpoint, we still have 2 years out. A lot can happen within the 2 years with all the ups and downs and volatility of Tesla. It might not represent a trade that gives you the most peace of mind. So keep that in mind. For those of you who want medium-term options, I would be looking at probably November. To be honest, I would be looking at January of 2023 because it would give me a little bit more insight into 2022 delivery number. But if that's not something you're willing to go that far out, then I would at least looking at September of 2022. $1,100 September 2022 is roughly $6,300 give or take, and $1,200 is about $4,500. That is about 4 months from now, and you spend about 4 to 6,000 for the odds that Tesla will get to about $1,200. I think that's a decent bet. However, on the flip side, if you think that there is a looming recession and Tesla might take a while to ramp up in the 2 new Giga facilities, then that might be a risky investment. In my opinion, it is a decent risk versus reward trade, so I will probably contemplate it if Tesla gets to the low 800 level. This is it for this video. Thank you for paying attention thus far. I hope you guys find the information helpful, and I hope the Tesla will make the last leg of bearish before bouncing on Monday and or Tuesday of next week, giving us traders and shareholders an opportunity for entry. But with that in mind, I will see you in the next video. Bye.